If you factor the risk and reward, obviously startups, very, very high risk, but the reward is just so much greater.
So today on Dumb Money, we're going to talk about why investing in startups is better than investing in stocks.
We're self-trained investors with over 30 years experience investing in and trading stocks. Additionally, we're one of the most active investors of early stage companies in the state of Texas.
We're really just three regular guys who have had better than usual success investing, both in stocks and in startups.
Today, we're teaming up with Joseph Hogue, an actual trained CFA.
He also happens to have a very popular YouTube channel called Let's Talk Money, and he's going to be talking to us about the other side of this argument.
That's right, guys. I've been an analyst for venture capital and equities. I love the big money in startup investing, but gotta say, I think I like stocks for the win here. In my video, I'm going to be revealing 5 questions every investor needs to ask themselves to decide stocks versus startups.
So be sure to watch till the end so you can hear Joseph tell us about why stock investing is better than startup investing.
If you enjoyed today's episode, please let the YouTube audience know by smashing that like button. If you haven't already, subscribe and also hit that bell to ensure that YouTube notifies you of all future Dumb Money episodes.
We're exploring today our reasons that startup investing makes more sense.
Yeah, and it has absolute advantages over trading and investing in stocks.
What I like about startup investing is that you have an opportunity to actually influence the companies in their outcome. You get to actually change the history of that company.
For me, it's not just helping them, but if you are in a situation where the CEO is going in a direction that you disagree with, you can actually say something and you can change the direction of the company. Yep. We've replaced CEOs before.
Sometimes they'll reach out to us because they know that we have certain expertise, and they'll say like, hey, Jordan, I need help with this, or hey, Chris, I really need help with this. Dave.
And with startups, that's kind of, I think, what we do best.
Yeah.
And it's nice to be able to add value, to actually be able to bring value to the investments. It's harder to have a lifetime changing event trading stocks, where with startups, you can, and we have multiple times, have had life-changing investments in startups.
Yes. All three of us are here where we are right now because of startup investing.
No doubt.
I would say that that's why we have to say that startup investing is better than stocks, because we've done better at startup investing than stocks.
Getting a 35x, whatever it is, 40x return on an investment, that doesn't happen often investing in stocks, even when you're using leverage, which we do with options.
But when you're factoring in risk and reward, when you're leveraging, it makes the risk go way higher.
Yeah.
Almost to the level of startup, where you can lose all of your money very easily in a highly leveraged option investment in a publicly traded stock. Very unlikely that you're going to buy stock and the company is going to go out of business and your stock goes down to zero.
All right, let me throw a third reason why investing in startups, I think, is more interesting than trading. Especially in 2019, there are a lot more opportunities investing in startups than trading stocks, because so few companies go public now. They're so large by the time they go public. Listen, our best investments are when we are identifying change in culture, change in technology, change in consumerism, and then we're chasing where we think there's an opportunity to monetize that change. And more often than not, we're able to find that opportunity in a private company instead of a public company. And a great example, we'll see if it works or not, is the cauliflower pizza dough company we invested in recently, Impossible Foods, which is private.
You made an investment in Impossible Foods, and before it even went public, you're having an opportunity to sell at what, three times your money?
Almost 3 times my money in a
days?
few months. Most of the time, we're not able to find a public company where we can monetize our information. We can almost always find a private company.
And there are there's a range of what a startup is, from the idea and a founder who's looking for his first angel investment to the almost about
Growth
to IPO.
stage.
Like, we invested in, embarrassingly, Lyft and WeWork and almost in Jewel.
I was not almost on that one. In the 70s, like a $15 million company would go public. That doesn't happen today. With all the regulation, it can't happen. A company doesn't go public until they're like a $300 million market cap at least?
How great it would have been to be alive and investing back in the 70s.
Because you could get access to anything.
With the exception of the 3% commissions, 3 to 5% commissions in and out of every trade. And now we pay nothing.
But you also get less upside, right? Because the companies have gotten so much bigger before they go public.
Way less upside. Which is my biggest pet peeve. I can't stand companies staying private because it concentrates the wealth.
But that's why they're doing it, because of all the regulations that have come out, all the accounting regulations to protect investors.
Protect investors, whatever. Protecting wealth right, is what they're doing. So, but that it leads into the fourth reason, way less competition investing in startups than investing in public markets. Most of the startups that we invest in, especially here in Texas, if we want to invest, we can invest, and we're one of only a handful of people that have access to that company and have the ability to invest, because the investment minimums with a startup are usually $25K at minimum, right? And how many people can throw $25,000 into investment relative to how many people can spend $100 on a stock? We're able to get in with significantly less competition in terms of investors competing with us for deal flow, and especially with local startups, than the 3,000 stocks, or reality is a few hundred stocks that everyone ends up trading.
And the price for those stocks is determined by the open market, and in startups, it's kind of negotiated.
There are more inefficiencies with the pricing of startups than the pricing of public securities. So there's more opportunities for people like us that have access to actually arbitrage those efficiencies with startup investments. It's tougher, way tougher with public stocks when you have millions of people and banks doing analysis on how much this should be worth, and everyone racing for that same
And like
information.
real-time reaction to market information.
Absolutely.
And that market information actually exists in stocks, but you only know what's been made public. You don't know the CEO's personality, and you don't know the strengths and weaknesses, where in startups, that plays a lot into the success of the company.
Yeah.
Fifth reason, the sense of personal connection, the relationships that you develop investing in startups, getting to be on that journey from a founder's dream, actually seeing that through to fruition, all the way through the successful exit, right? Is there anything that tops that?
As much as we like to make money, I love to see other people make money.
And I can't believe I'm saying this. 5 great reasons why investing in startups
is better than investing in stocks. Even though we love stocks, and we are way more active in stocks than startups.
But if you told me I could never trade a stock again, I would be unbelievably depressed, maybe in perpetuity for the rest of my life. So I'm glad we don't have to make the choice between the two. Listen, there's never been a bad time to start and invest in a great company. We all agree. It doesn't matter whether we're at the peak of a market or at the bottom of the market, there's never a bad time to invest in a great startup.
So those are our top 5 reasons of why we think startups are better than stocks. We obviously invest in both. We're not professional investors, we're amateurs.
We're professional amateurs. What's the prosumer version of what we are?
We are the prosumer. We're like a high-end camcorder.
Well, we're kind of professionals because we don't have any other job, right?
This is all we do.
So technically, this is what we do.
Isn't that the definition of professional?
I think so.
Yeah.
So we are professional investors.
I'm a professional investor. We're semi-professional investors. Our buddy Joseph Hogue, he is an actual professional investor. He's a CFA. He's the real deal. He's also a legit YouTuber. And he right now has a video that has the exact opposite of what we just said.
Guys, I just posted that video with the 5 critical questions that every investor needs to ask. 5 factors to help you make that decision between stocks and startup investing. This one is epic, so look for that link in the video description below.
As soon as I'm done watching this video, I'm gonna watch that one.
I want to see what he has to say.
This is our first collab. This is very exciting for us at Dumb Money.
If you like the idea of us collabing with other YouTubers, experts in the space, let us know. We'll do more of them.
And if this video was useful to you, be sure you hit that thumbs up button.
And talk to us about what you think about startup investing versus public market investing.
Yeah, which do you guys prefer?
That's gonna do it for today. Be sure you guys subscribe to see every video we make. There's a bell that sometimes works. YouTube loves it when you hit those buttons. We're Dumb Money. We'll see you next week.